Hey traders, Nick Shaheen here looking at Nike. They reported earnings. Today is 3/21. They reported earnings after hours and the stock's falling 3 or 4%, can't remember. Anyway, so here we are just to look as what happens now. This is obviously as of the close today. Markets were strong. Nike went into the close up 1.5%, and what's worse, it set a new all-time high. I don't like it when they go into uncertainty this strong. That leaves very little room for error. And if you looked at the open interest as far as the options are concerned, the path lower was much easier, meaning there was a lot of overhead resistance and some downside push to, I think I looked at 85.5 and 82.4 from memory, with no real support until the 82s and 83s. Doesn't mean it's going there. It's just saying what I'm seeing, what I saw going into the event. There was not a lot of resistance, but the path lower was a lot easier because of the push lower, the downside pressure. So it played out. That's how the stock is moving. It fell, it rallied, and then now it's falling. Don't know where it's going to open in the morning, but this is how it is right now. All right, so now what? Let's assume it opens here tomorrow down where it is at. And so here's what I'm looking at as far as how it got here and where it's likely to go. So looking at, this is an hourly chart. So every bar is 1 hour. And we saw some action yesterday that was kind of funky. And here, and we have had uncommitted buying, selling, I love it, I hate it type of an attitude in the markets. But definitely today, they decided, okay, we're going to take the word of the Fed. Things are great. They've got our backs. Forget China. We're going up. And they did. So I'm going to go back to the daily chart to get some good ideas on where it could go. So this is a daily Nike chart, and I must have said something that woke up my phone, something about Google, not sure. So I'm going to zoom into a shorter period of time so we can establish where we're going to look at. So it's opening somewhere, it's right here, right now. Okay, so naturally this is a place where I think it would pause. Why? Because it was a neckline. If you look at it right here, let's mark it up. This was Adobe, kind of a funky close, side note. Okay, so this zone right here was a little battle zone, and they tested it, and they tested it, and now they're falling back into it. Naturally speaking, these would be resting places, because whoever fought over it here, they're going to fight over it here again. Now, this makes it a little more important because of what happened here. If you can see, that's happened before, and it was an important ledge from which it fell that much into the Christmas crash. So I'm going to guess this was October. Yep, this is October. So this zone, 82, 83, sticks out in my eye. Okay, because for that reason. And let me zoom back out in time to see if, okay, that definitely sticks out because this is June of last year when they said something on earnings and huge reset in price. They failed somewhere around 82, 83. They fell, they came back to it, they took it, they fell from it, and way below this zone, obviously an overshoot. That was a buying opportunity. On the way up, they came back to it, and now they're fighting over it again. All right, so I'm not saying it's going there, but I'm telling you that it's the first zone of support. There are many zones, but let's talk on the daily candle for now. So 82, 83 sticks out, like I just said. Okay, that's zone 1. What if this fails? This will be zone 2. To my eye. I use crayon because it's a rubber band. There's no sense of drawing nice lines like that. Why do I pick this zone? Because of this event right here. Okay, back in October, we had a major correction in the stock market, and this was a ledge from which the stock fell, whatever, 10, 12, 15% from here. Obviously, a place to pay attention. And it came back to it, fought over it, and they sprang from it. So if this fails, then this would be level 2. So 1, 2. Now, from the volume profile, it could fall to 75, 73, which would be, this whole cluster here is definite zone 3, just from the volume profile. All right, anything lower than that will be a buying opportunity. So here's how I see it. Too high, over exuberant, going into, doesn't mean it doesn't deserve it. It's just, for now, over exuberant. Too low, Christmas crash. Sentiment was crappy all over Wall Street. Somewhere in the middle lies the truth for now. Down the line will be higher. First zone of defense is right here, 82.83. Second zone is, I'm going to call it 79 plus or minus a buck. Absolute worst case scenario for now would be zone 3, which is 76, 75. Let's say 75 plus or minus. And if it ever goes below it, I'm all in, basically. Assuming the macroeconomic conditions don't deteriorate, we don't get another shooter drop. So that's the plan for Nike from a price perspective. All right, so let's talk a little bit of Nike valuation. I heard some experts in the news. Okay, valuation is too high. Too high relative to what? It sells at a 33 PE. This is a trailing 12-month PE. This is a company that, the report wasn't bad, by the way, we haven't addressed that. They over-delivered on the bottom line, they met the top line, and they had double-digit growth in China and the Eurozone, which are the two places where they have the most problems because of tariffs and the central bank's dollar or whatever. So all these headwinds, and they still deliver double-digit growth, single digits in the US, North America I should say, 33. Now compare that to the, what can I compare it to? Obviously Under Armour, because they talk about Under Armour and Nike in the same breath. Well, Under Armour still loses money. Yeah, between the two, I'll sell Under Armour, buy Nike. And as far as for the long term, something similar to Nike, where it's a retail but not a store, because they control their own inventory and they can sell direct, and they have all these online things and all these technology things. Maybe Lululemon. They have the same type of setup. And Lulu sells at like a 45 PE. So it's cheap relative to the competitors that I see, well, the sector that it belongs in my opinion. Under Armour is still way too expensive relative to this, and this is a proven management team. They are delivering, and they're executing for years and decades, and they're still the dominant force, and they still manage a good P&L with all these headwinds in China and the Eurozone, and the debacle in the US with the advertising promotions and all that. So I call it a win. So it depends. If I'm long the stock, I wouldn't get out of it, because this report does not change the thesis that got anybody into it. If you loved it yesterday, you don't hate it today, because they didn't disappoint on anything that I see. And if you weird, it's not showing the price. So if all these experts are saying, well, now it's expensive. Well, yesterday nobody said it was expensive. Everybody said you got to own it. So not a game changer. If I'm long Nike, I stay long Nike. If I want an entry point, well, it's not an obvious entry point. It's still this close to all-time high, which it's set today on the 21st, 6% off of it just because of the dip. So let's put it this way: if the stock markets are higher down the line, so is Nike. So why not, hang on, or maybe nibble for a trade? And where do I put the stops? Stop number 1 would be at 82.83. It all depends on the preference. All right, Nick signing out. If you have any questions, let me know.